Hey, what's up, everybody? This is Chef again, coming at you guys with the weekly watch list. All right, so hopefully you guys are ready to dig into some tickers that are going to make the watch list for this week, and not just this week, guys. But I want to remind you guys today we're heading into the last week of the year, and we're going to look into some tickers that have huge attention and huge potential for the next couple of weeks, right? So this is not only a weekly watch list, but it's something to keep on watch as these things develop. As you guys can see from previous videos, I give you a lot of great risk to reward plays and things that you can potentially trade, some pattern trades, but mainly a lot of them are swing trades. If you guys don't know, that's kind of like the stuff that we've been posting lately, right? So, first and foremost, I guess, want to let you guys know Merry Christmas and Happy New Year's. I hope you guys had a wonderful year. And some of you guys are new, so you're ending up with a red P&L. Look at it this way. It's not a loss. Okay. Look at it as a lesson learned, and you have the opportunity to come into this new year to do something a lot greater and only better yourself as a trader. For those of you with the green P&L, and this is your first time hitting a green P&L for the year, after like so many tries and so many tries, keep on going. Don't stop, okay? But don't let one green day ruin your next day, is what I'm saying. Don't let it get over your head and get prideful and get greedy and get selfish and all these things. And don't get in over yourself again, okay? For those of you who are brand new and you're continuing to learn, please continue and continue and continue. Don't stop. These markets are ever changing. They change on a consistent basis, and there's not a single day where markets remain the same. Everything changes, and that's why our strategies have to depend on who we are as traders, as individual traders. Okay. Your account is different from mine. My emotions are different from yours, and the market is ever changing. So you have to learn to adjust and not follow me and not follow anybody else, but understand first and foremost your emotions and the way that you will carry yourself whenever you take profit, enter, or stop loss, or execute a trade, et cetera, et cetera. So just want to motivate you guys. And man, I really hope you guys have a great holidays, and just end the year very strong, right? So stay motivated no matter if you're a new trader, an experienced trader, or just anybody out there. Just stay motivated. All right, so I want to point out a few things here on the market. The weekly chart is still kind of bullish. There's nothing bearish about it. There hasn't been anything bearish about it yet. Just from previous videos, you guys know that they're even without a catalyst. I've been telling you guys that it doesn't matter. We trade supply and demand. This is what I personally do as a trader, and it's the only thing that keeps me structured and disciplined, and just understanding the bigger time frames and the bigger picture, and not getting biased towards anything. Right? Set the alert. If your alert hits, it's bullish. If it doesn't, then it's probably a fake out, and you use that same level for a put play. But I guess we're not there yet. Anyways, we just had a rockin' week, solid green day. It's literally looks like on the smaller time frames, looks like a little V-shaped recovery. But overall, in general, just kind of like something that I pointed out to you guys last week. I told you guys it was going to be a retail week, right? And what did I say? I said most likely a lot of these little baby patterns are going to play out, and that's exactly what happened in the market. I said there's going to be some buying, and the minute you get that direction, it's going to be directional, right? And that's kind of what happened all across the board with a lot of tickers. A lot of tickers ran. You guys seen Tesla. Tesla was like one of the biggest ones that ran this week. It was a legit falling wedge pattern that ended up breaking out, and then you get this huge candle. So now what that creates now is a strong bullish engulfing that will lead to more retail crew coming in, and this retail crew is going to come in and they're going to want to trade above the high for a continuation, right? That's the retail mindset. But the smarter person will probably come down here and probably buy the dip down here at 50% control points. And then of course for the retest, if you're not that person, then don't get in there. If you are the person who's trading the break above the high, which already had a big move, and you're kind of missing out on the rest of the piece, then by all means keep trading that way. Okay, be wise according to what your trading style is. There is no perfect entry and exit. There is a strategy for everything that we do. So just remember that. Okay. So giving that information to you guys, it also did mention that there's a lot of news coming out at these levels. What this is actually creating now is that it's actually creating a nice structure here. Okay, this is what I want to point out to you guys. You guys are probably looking at it and you want to trade the break above, all-time highs, and we're going to keep running into next year. That's all cool. I think it's great. But again, just understand the bigger picture of what we are creating here. We're creating a nice base after a huge rally the whole year, basically from this point here. Okay, we just been cruising on by. All year we've been green, basically the previous year as well. If you want to count that, besides this whole COVID drop, we started off here in December and then came in the beginning of the year. We kind of just had a heavy drop just to sling us back up there like a trampoline, not caring about anything else. So any news that comes out in the coming weeks or whatever, don't take that and get biased. Okay, remember that there's a bigger picture out here, and the stock market is still healthy. There's nothing wrong with the market yet. Just like I said in the previous videos, I said the only time that something may go crazy and something may explode it is if that catalyst actually brings in a lot of negative reaction, not just the reaction, but the continuation of that, creating a domino effect. The domino effect meaning that we're going to have a nice trend change, and then start creating a staircase to the bottom. Be aware of what's creating. It's creating that base. So this base can actually be a supply or a new demand. The supply into the new year, which can create a nice downtrend, a staircase pattern, kind of like, this huge pattern. It doesn't have to, okay? It can come down only like 10% or 15% and then just come right back down. Or we can literally start this new year and then start traveling back up into that like 5K, 5250, and then 55, and then the 6K all the way into the next year, right? So this new year has a lot of opportunities no matter what we do. Every day is filled with opportunity for you to day trade, scalp, swing trade, invest, build your portfolios. It has so much out there for you to actually do. It's a matter of you understanding if you're going to invest into something that makes sense, right? If it's something you make sense and you believe and you trust in, then by all means, let's go for it, right? Don't think twice. Just have a game plan. That's all you got to do, right? So I want to give you guys today a few tickers that are going to make sense for you. Looking into this new year, this market is all-time high, but you still have tickers that are beaten down pretty bad, right? So the first ticker that I want to give you guys is going to be ARK. It's an ETF. Okay, so if you guys don't know, Kathy Woods, she owns this thing, and she has a lot of great stocks in her portfolio. Basically, the ETF right below. So there's a nice basket of stocks in the ARK ETF. So look at what it's creating, right? Just like I say, nice little base right here. Nice little base, a drop base. If this thing can just hold above 90 and 99, I think this is a great area to start looking into, buying the dip, whatever you guys want, buying shares, leaps, start looking for the trend all the way up. As you guys can see, I already have my alerts, but this is a great spot. Okay, just giving you that. Disney is another one. Look at this, same thing. Okay, drop base. Here you go. And this is the weekly time frame, guys. All right, look at all my alerts on Disney. Right? I even have a bottom one just in case it decides to drop down here. And if it does, I'm gonna be buying some more shares. PayPal. Look at this other one. Look at the reward that this thing has. Okay, it's huge. But again, it's the same type of setup that we have here. Boom. Okay, drop base. This is a huge drop from 310 all the way to this 180, 190. So consider starting to look into these tickers into the new year. If this market decides to drive New Year's, look at this base and consider it, because now what you're going to have is you're going to start off this new year with a great risk to reward play, right? What is the risk? Minimal. What is the reward? Basically all the way to that all-time high is what you want to look at, okay? SQ is the other one. It's right next to PayPal. It's behind PayPal. The way you want to look at SQ is it's still lagging behind from PayPal. It's just one step behind is what you want to look at. Why? Because first and foremost, PayPal has that nice base. It has that accumulation phase. If you guys don't know, go look at the previous videos in Conservative Collectors, and there is a video there that talks about the accumulation phase and also demand, okay? One and the same. So this one has not created a base yet, but on the 4-hour time frame, if you come and take a look, this thing looks like it wants to, you know, get a little rally. Why? Look what it did here. Boom. You want to look at that, or you can even, you know, say that we had a nice little downtrend, we broke above, and we're coming basing out, and then now we're shooting right back up, right? A lot of traders are going to try to draw a little trend line here and then, you know, call that a little pattern. Cool. But again, look at the bigger time frame and look what's, you know, where are we at currently? We've been downtrending. We're still downtrending. It looks like it wants to try. So all my alerts are here. My alerts are here. Alerts are there everywhere. Looking for leaps, looking for shares, looking to play the short-term swings, you know, even if it's 1 or 2 days, take profit while I hold the leap and the shares and all these things. You start building into positions like this. So it's still behind PayPal. Let me just give you an example why. If you compare it with PayPal, it's still behind because now PayPal is the one that's actually building a nice little structure. This thing has been building right here for quite some time. And I've been catching a lot of the swing plays in here all the way to the top, buying the dip, selling at the top, getting in there for some day trades and in and out, just using the same levels, top and bottom levels. That's it. So while you're sitting there, most of you are probably wasting your time trying to chase little day trades. Come back over here and look for some risk to reward plays into the new year. This is what's going to, you know, bring a lot more rewards for yourself, even if you're a new trader, because now you don't have to worry so much about the downtrend, because now it created a base. It's creating some stability for you, accumulation where somebody believes that PayPal value is at a great spot. And then now you're looking for the uptrend while everything else is kind of going sideways, and you know, people are trading these all-time highs and stuff. You're sitting here holding a position longer than most of these people out there. So think about that for a second. Okay, there's a lot of reward to the upside for PayPal and SQ. PayPal has the better setup. SQ does not yet. Okay, that's the difference. But either way, they are still at amazing levels. And just to show you here on this chart, we are at a great level, a great spot, a great opportunity to buy a company that you may or may not believe in. Okay, again, do your own research, because I'm not going to sit here and say that this is financial advice, because it's not. This is an idea. This is a an opinion that I have that has potential to, you know, give you this huge reward. Okay, and if so, by the end of next year, if we end up over here and you did not come in here, I'm gonna come back over here and show you this video. That's what I'm gonna do. So anyways, let's go look at another one, INTC. Check out this one. Okay, this is something that trades a lot more range, and it's a little more riskier, but it's a lot smaller of a ticker, which, you know, can be a little more of a patience play. But look at the way that it's been trending. Look at this staircase, staircase, staircase down. And then finally, we're heading into earnings. I personally think that the entry is down here between 50 to 51 area. Target would be around the 54 and then 58. It's a great opportunity, even if you can catch an $8 move with shares. That's still pretty good for an INTC play. But start looking for, you know, INTC to show a little more of a bullish sentiment into next year. INTC, like I said, if you guys want to go do some research on the company in itself, then by all means. If you don't believe in it, then don't buy it. If you do a little more research and, you know, see if you see value in. Right, so those are the ones that I personally like. I know there's a lot more out there, guys. I know there's things like Roku, another ticker like ZM. You know, there's just so many out there, but I wanted to give you the ones that I personally see value in. I know there's tons more tickers out there that have a lot of growth potential, but these are the main ones that I personally think will be a lot better into the new year, and finding good trends and things like that. The stock market in general, like I said, changes on a daily basis, and creates lots of opportunities for you to day trade, even swing trade for short term, 2 to 3 days, even potentially a week. But again, it falls down to how you're going to look for these and what you personally see value in. Like I mentioned earlier, we have different emotions. We have different account sizes. Some of us can, buy 100 shares of SQ, while some of us can only buy, 3 shares of INTC. So it falls down to you as a person, and it falls down to what you see value in. So remember to always go back and do your due diligence. Always go back and do trust in that research that you did, and execute based on what you've learned and what you believe in. Okay. So let's talk about the levels for some day trades in between. Let me just make sure I take off this stuff. So I'm going to go on the 4-hour here. And the only reason I'm bringing up ARK is because of Tesla. Tesla is a big ticker. And if you guys can't trade Tesla, like I said earlier, then you should probably go to ARK. If you can't trade these, then you shouldn't probably be trading. You should probably be trading BAC. So here, ARK looks like it wants to have a little fight. As you can see that wick here, and then you can see this wick here. We have sellers, we have buyers right on top. So keep this very, very simple, okay? See those candle bodies right there? This is all I'm doing, okay? Break above that 99, that 99.30 if you want to get a psychological number. Break below that 98.50, okay? Psychological number, this is what you want to think. 98.50, 98.30. Your target above is going to be this piece by the end of the week. Very simple, right? See my alert right there? 102.60 to as high as 103.50. Coming down below, it's probably going to come down to this wick right here. Okay, so your target would be around 96. I personally will not be trading the downside. I'll be looking for the break above to this thing continue to the top side, and I'll be swinging all the way here. If it wants to keep breaking above this level, this 103, okay, your target is going to be right on top right here. Okay, so I use this candle body here, and I use these 2 candle bodies right there. The targets for that is 107 and then the 108.50. Okay, very simple, right? So that is ARK. Okay, Disney. We're gonna come look at Disney real quick. This one gets a little trickier because Disney is not like the kind of ticker that you can trade on a daily basis. But once you get that good dip buy entry, it's a great stock, right? So anyways, right now we're at a supply. Okay, so whole number 154. 154 and 153.50. If we can break above that, the trend change will change on Disney, and this thing will keep on continuing to the top side. If you want to buy the dip, you want to buy the dip right here. Okay, so that 150, I'm gonna give you a psychological 150 to about 150.90. Okay, this is your dip buy opportunity. So let's just say, for example, the market comes down and we end up right here. This is where you want to buy, and then you want to take it back all the way to that 154. Again, over 154, it will create a trend change, and then we'll be going up to this 158 and 160. Okay, so look for these levels on top. PayPal. I like this one. Let me say this again. All right, this is a very, very clear trend change opportunity here, and anything over 190, anything over 190, it's bullish. That's how simple I'm gonna keep it. Right below 190 is coming back down and holding the range all the way to this 180. Okay, that's it. Very simple. So anything above 190, we're bullish. Anything below it, we stay in the range between 180 and 190. That's it. Very simple for PayPal. SQ. I'm actually in a swing position for this one, but not going to get biased. My entry position here for calls or puts, anything below 166.30, it's just short. Anything above 168 is a long, okay? anything. Basically, what I'm telling you for PayPal and SQ is that once the sentiment and the price action stays above these levels, it's creating a new trend. It's creating a price action bullish sentiment. Therefore, when you look at this ticker, you should be more than comfortable to hold your position to the long side and knowing that the bulls are going to step in and create bullish momentum with some volume, maybe some catalyst, who knows, maybe some patterns in between on the smaller time frames, and it's going to catch a lot of attention. So when that catches a lot of the attention, it creates that bullish momentum that shoots your tickers up and you're able to hold your swing plays, okay? So very simple. Explanation on SQ and PayPal. INTC for the smaller accounts out there, you know, I like INTC. It's a slower mover, but definitely a great opportunity for you to take a little swing position. So for INTC, I do like that we closed right above this piece right here. Okay, so that 51 to this 50-50, okay? This is the area where I want INTC to hold. Let's just say, for example, we do get like a nice little red day. Then if we can hold 50-50, that would be the buy entry. And then your stop loss right here. Very simple, right? Above 51, anything above 51 is bullish. I do have this target right here of 50-60 level. And then that 50, what is that, 53? Just rounding it off. That's my target for like a swing play. I wanted to do something like that by the end of the week, right? So that's for INTC. CRM is more like a little pattern play. I think the setup is pretty nice. It's going to depend a lot on the market if we're going to gap up or gap down, whatever the case may be. But I like that the buyers are showing up right here and they're kind of like pressing in the candle bodies right here, right? So all the buying pressure is in there, or the selling pressure, whichever one may come first. But if it breaks 254, I will look for a long position. And my target by the end of the week will probably be around these levels down here, 260 and 264. Those are my first two targets for a nice swing play for CRM. If it can't break above, then most likely this will be a put and it'll have a nice red candle bringing it down here, which in that case, I will not look for it. I will still look for the 254 break for the long position for CRM. CAT's another one that's kind of just been holding and been range trading. And it's kind of nice because it looks like it's curling down. It's kind of weird. Let me just kind of like this, okay? So give you a little picture of like what I envision or what I see in these candles and the way that they're forming. So you can see it hasn't dropped any lower lows. So it's still holding a nice base. And if it could just keep trading sideways, I'm okay with that. As long as when we do break, we're able to catch the break above. So CAT, again, the spreads are a little different, a little more difficult to understand and to hold just based on your emotional levels. But it's definitely a great ticker. If this thing can just stay above 206, okay, I think the trend change will happen around 206, and then we'll end up going to this. What is this? 211.50. Basically, you want to look for this high right here, and then potentially you want to look for that high right there around that 217.30. Definitely trail everything while you're in here. But I think CAT can be a good opportunity if this thing just dips anywhere inside here. It's been getting a lot of dip buying positions, and I've honestly been missing this whole thing, but I just did know that the characteristics are getting bought up on significant levels, right? So dip buy area, I would say anywhere in here. Anywhere above 200, I would look for dip buy to 202. If you want to get in between, I think I will recap on this one, but anything over 206, it's going to be a nice long position, guys. It's going to be a change of trend, right? CRWD is another one that I kind of been following. As you can see here, after that nice downtrend, it kind of created this little pattern inside here. So if you draw a trend line on the bottom from the wicks to the wick here, creating that pressure, so 212.50, it'd be a long. If it gaps up over 216, it'd be your other entry. And what you want to look for is for this high right here of 237. It almost seems like a huge target, but it will definitely pop something like that. Okay. So, but yeah, that's it, guys. I really just wanted to, give you guys a good heads up on some tickers that are going to be great for, the coming year. Disney, PayPal, SQ, INTC. I think these are some of the best ones out there. if you guys wanted to take a look at Roku, by all means. I personally, I don't think Roku is a great stock long term, only because it's just a simple TV, and I don't think a TV stock should be worth $490. But again, that's my personal opinion, guys, and that's the research that I've done on it, and that's what I believe in. So if you guys think that it's a great dip buy opportunity to invest into a stock that owns a TV, by all means, it's still at a great dip buy level according to the charts. But I don't. Okay, so if you guys want to add that to your list of great stocks, by all means. I just personally think Disney, PayPal, SQ, ARK, INTC are the great levels that we can be looking into, to actually invest in and buy shares and buy leaps and things like that. So, sorry, one more. Twitter. Twitter is another one, guys, that it's at a great spot, the weekly level. As you can see, we've been downtrending from 80.75. Good thing I just remember this. So down here, very simple setup for me, guys. This is going to be one of the tickers that I enter tomorrow and market open, depending where we're at. I will definitely send a message out across many servers and even Instagram. Definitely try to tag as many people as I potentially can. But this one I want to enter anywhere in here between 44 and 44.50, and my target's going to be around 47. So it's going to be a nice swing for me. Definitely look into some leaps and things like that. It's at a great buy level. It's again, I only say it's a great buy level just because of the beat down, the loss that it's had, basically all year. And we're heading into this new year, and we're looking for great risk to reward plays that have, great potential for the new year to start investing in. So if I can catch those bottoms and start trading it on the way up, I don't want to sit there and say, well, at least I own shares are from the bottom, or I call the bottom. I want to sit there and say, at least I was able to catch 90% of that uptrend, and I was able to make grow 50% of my account in this one ticker alone for the new year, or whatever it may be, right? I don't care. I could care less about calling the bottom or care less about calling tops and things like that. I just want to grab the meat of the move and make sure that I'm catching it on the way up as it's going up, right? Because we're traders. We want everything to go up. We want huge green candles, and we want some good P&Ls. So at the end of the day, guys, remember to follow the levels, manage your risk. Don't oversize, don't overposition, don't overtrade. Stick to some rules, stick to some discipline, have some structure within your trades, and understand what you're getting yourself into before you even enter any position, guys. Okay, so let's start off this new year right, guys. Let's finish this year correctly. Let's stay motivated, guys. Everyone, please. Happy holidays to everyone out there. I hope you guys continue to grow, continue to learn as much as you potentially can, and don't stop. Don't let anybody stop you from growing or keep on growing. If you guys are waiting for the new year to start some goals, y'all better start today or tomorrow, whatever the case may be. But don't let this new year be the reason that you start something new. Your day for change is today, because remember one thing: tomorrow is not promised for anybody out there. Okay, so you guys stay green, and I will definitely see you guys on the next video. Again, stay green.